Going for Microsoft last week was a good choice, and Microsoft is still in the trading portfolio. But Xpeng, XPEV, well, that trade has not turned out successfully yet. Will it do it this week because it's still in the trading portfolio, or will it be doomed for a heavy fall as quarter results are coming in for Xpeng? I will try to answer that question and many more in this week's podcast. We are in week 48. You are listening to the StockInvest.us podcast, the trading tips with Jim. I am Jim, and for the next 30 minutes, I will try to guide you through the week ahead of us. And by the end of the podcast, tell you what I think can be good trades for the week. Stay tuned, a short jingle, and I will be back. In last week's podcast, I spent some time outlining the longer future as we're heading for the end of the year and the new year is coming up. That means I will not spend as much time on these things in this week's podcast. Please go back and listen if you want the insights, what awaits, and get a deeper understanding of the things I'm about to say in this week's podcast. Because there is two things I love and two things I ask you repeatedly to keep an eye on and use. It's fundamental analysis and technical analysis. Keep an eye on the fundamental things because they will direct the long lines. And Nasdaq had a good week last week, up 0.72%, ending the week at 11,226 points. Dow Jones up more, 1.78% for Dow Jones, ending the week at 34,347. Both of them being above the very important support levels. Such a good sign, we like that. But just a short rewind of the things I said. We need to keep above these support levels. Because if, for instance, Nasdaq breaks through the 10,300 to 500 support, there will be huge falls. We have been and still are in a bear market. We haven't had the confirmation that we have changed the trend for an upturn trend. And even if this week or next week will be green, doesn't mean that the bear market is over. It could just be a short-term reaction down. Usually all the bear markets end with some really dreadful falls. You have some sort of panic at the very end, panic, and when that panic fades away, being at the very top where everything just falls very hard, usually in 3 falls, you find the bottom, and from that point up it's just a slow upturn, and eventually you will be back and even better than before. Nasdaq 11,226 points, it was up at 16,000 points. We have a long way up, and over this last year, as we're getting to the end of the year very soon, 4 weeks left, I had one goal: try to keep afloat. Of course, make money. We have made money on the trading tips, more than enough, but the main goal was to stay afloat and not lose too much, because on the upturn there will be really good things waiting. Easy money in many ways, because you don't have to be that good, as most things will go up. And the logic which I'm trying to explain here is that there are a few things that is really important. First of it is that the market will turn before the fundamental news do. That is because the market discounts expectations. It discounts the expectations into the price. So usually it's either more optimistic or more pessimistic than the fundamental news. And usually a bottom in the stock market is long before the fundamental. We know we are heading for a recession, but the stock market can already be bottomed, because, as I say, there is a certain expectation in today's prices. But this week will be a lot of numbers, and if these numbers are not within the expectations, you can see market starts to fall. That is why I ask you, please read news, even if it's headline. Keep an overview. you will not get as surprised when things happen. And maybe there is a day in the week where you shouldn't trade, because it's an important day where market can really go both ways, and you want to stay away, not gamble too much, or you will want to be in the market if you are a trader. And this week it will be housing numbers, manufacturing numbers. They start already today, and then there will be tomorrow. The housing numbers will be tomorrow. On Wednesday is the day that you really want to pay attention to, because the GDP numbers will come. Expectation is that the growth was to be around 2.6, 2.7%. If these numbers come in worse, market will react very bad. Will they come in that bad? Well, we know that the analysts been somewhat off. They said banks and special analysts and experts said that, well, the interest rates will not go very high and it's just keep going up. Luckily, if you're listening to this podcast, you heard that a long time ago. I told you interest rates will just go up, and it will go very, very hard up, and it will just continue. If the analysts get these things wrong, that the growth is much less than expected, can bring easily Nasdaq down to the support level. And if this very important support level is broken, it will be mayhem, sorry to say. So keep an eye on this, and there will be price index numbers, there will be consumer expenditure numbers, a lot of these on Wednesday. So expect Wednesday to be a thing that defines the market. Now let's assume that the GDP will come in, because the experts now expect a recession next year. And again, a small commercial for myself. I told you this 2 years ago. This is exactly what will happen. We will have that superinflation which came, and at the end of that you will have the recession, the stagflation. It has to come, and you will see work numbers which will be released on Friday. You will see they're starting to get really bad very fast. So these are the things that you like to keep an eye on. If the numbers come in as expected, you can expect that the bottom will hold, that the market actually will continue upwards. And with some good support from accumulated volume from previous trading, as I said, around 10,300 to 500 points on Nasdaq, it can be the week for tech stocks, the really strong week. You do not want to be left behind, and you do not want to be caught by surprise. So Wednesday for sure is a number, and Thursday and Friday just continues with numbers. So I expect a ugly week up and down, where I think Wednesday really will set the scene for the end of this year. It's so hard to say exactly where it will go. I have that feeling that we are for a short upturn, but at the same time, things can come worse than expected, and markets can take a huge fall. There will be a few quarter results, but none very, I would say there is Kruger and a few of them, and you keep an eye, but not. Last week was somewhat funny, and the week before, but now it's slowly getting less interesting. A few other things are also moving in somewhat right direction. So we have this situation where markets is in a possible upturn, and we are getting important data, but we see other things happening as well. Oil, which I say will go up, and I think that we'll have a rally to 200, has done the opposite things over the last few weeks. Even last week fell another $5, currently trading around $74. There are some reasons for this. We know that the US now is frantically trying to increase oil production everywhere else than in the United States. allowing Venezuela back with their oil. And they are trying to please OPEC, and things are really boiling. I will spend a few minutes on this topic because it is somewhat important. As you know, I told you when oil was 20, buy oil shares, whatever you can, just buy. I did that myself. I built up a very nice oil portfolio, been doing very good. Now we are at a situation where even I have to consider what to do, because I have a very strong exposure in oil stocks. Currently oil stocks are holding very good. The reason for this is because the traders, they expect that this small dip in the oil price is just temporary. Coming up, not this week but next week, are very important for oil, as OPEC Plus will meet, and the cap on Russian oil is to be set. These things can cause oil to either fall or rise very fast, depending how it moves. Now, if you are in a situation where oil falls, it's actually very good for the stock markets, because oil is such a huge represent in the inflation numbers, transport, logistics, everywhere we still use oil. So oil going down is actually very good for the stock market. It means that the inflation pressure will go down, meaning that the banks do not have to, the Feds do not have to increase the interest rates, and money will always go where the safest return is. And as long as the bank keep increasing the interest rates, you will see money flowing out of the stock markets. But as interest rates either slow down or stop, you will see more money coming back to the stock market. So oil going down is good for the stock markets. Of course, not so good for oil stocks. We are at a crossroad. We are heading for the winter, hard winter in Europe. Already snowing here in Vilnius. And this can really set the scene for the oil price. Not so much for the gas will come a little bit later, but for the oil price ahead of us. So end of this week, next week will really be a telltale. The reason I'm saying this is I hope a lot of you used my voice, got into oil, have benefited from these extremely nice upturn in oil shares, and even all the nice dividends they've been paying lately. You have to make up your mind. Should you reduce your exposure a little bit, or should you take a gamble? Because just a few weeks ago oil was up around 90, and despite oil shares holding quite good, they have fallen a little back. Do that mean it is time to take a gamble into more oil shares? Because if OPEC Plus says no, we will not increase production, and they will struggle, will have a cap on the Russian oil, and that thing will really backfire with Russia going for deliveries to other countries, instead really killing all oil to Europe, because right now Russian oil is finding its way to European markets through different subsidiaries. It's stacked up in different harbors, just waiting for options to be released into the market. So these things can really revert. Oil can really skyrocket. Right now it could be the situation where the oil upturn is over, and it might be that even Biden gets it correct. He was selling a lot of oil around $80-90 per barrel, and he said he will buy back at $70 per barrel. It might even be that he get this one correct. We will see. Keep an eye on it. Oil going down, good for the stock markets. I'm not sure it will happen, but I think next week will be a huge telltale, and you can do a lot of speculation. Either you are shorting stocks or going the other way. Gold is moving upwards, has a little to do with the dollar losing some of its strengths. Gold and dollar is quietly tied together. Gold up $17 last week, and I think it will just continue upwards. 10-year Treasury yield, one of the really good numbers to follow, actually fell last week by 3.25%, 0.12, down to 3.69%. As I told you, as long as this one goes up, the stock market will go down. Going down now, good scenario. Indeed, it means that most experts believe that the interest rates now will not continue as high. For the next interest rate hikes, I think I read somewhere that 75% of the expert thinks that the next hike will be 0.5, not 0.75. So the expectations is lowering, which again is good for markets. There are some different views about these things. So this is the fundamental picture. I will very quickly run through a few technical things. Look at the chart, come to a conclusion, will it be a green or red week? As far as I can tell, I already told you it will be a hard week. But I love using some technical things to try find the answer. And maybe you're a new listener and you think, why all this information? As I told you and will tell you, keep telling you for all the podcasts forward. Understanding the fundamental picture, trying to get the bigger lines correct will enable you to do much better trades. You heard me say that oil is at a scary point. Can be that the real nice upturn in oil is over. Or it can go both ways next week, as OPEC will meet and they will try to get the cap on Russian oil. So why would you be totally invested into oil? Why don't you want to spread your portfolio a little bit? Maybe look into other sectors. This and much more you can extract from this kind of information. Gold is going up. What will happen with the gold producing companies? Well, we know that oil and fuel is very huge part of the costs for oil producing companies. So we have a scenario where the energy cost, meaning the fuel cost, go down, gold prices go up, should mean that there might be an upside in gold related stocks as we speak. And I would say maybe even for 2023. That was just a free tip. You can use it for what you want. I suggest have a quick look at some gold stocks and maybe you will find one or two that is good. Anyway, let's have a quick look at the buy and sell signals that we analyze at StockInvest.us. And right now we can say that there is 33% buy signals across all stocks, up from 29 last week. High, but not very high, meaning that you can expect further upturn as well as a slight downturn. Doesn't mean much, this number. Going to Nasdaq, last week was 42% buy signals. As I told you, not sustainable. Have to have a correction, and a lot of stocks Nasdaq actually did. It was some of the major stocks pulling the train to green. But overall, most Nasdaq stock fell last week. And you should know if you were trading Nasdaq because you should see some red in your portfolio. But it was some of the main locomotives driving it into a slight, small, little green. This week, it's 30. Had a huge correction last week. Is it enough to bring that super buy position? No, it's still very high. We have to go back to week 41, 42 when it was down at 10, 11 and 12, where we had that very nice buy position. Now it's the same like for the overall market. It's a situation where things can easy go up, easy go down. There is no real clear answer to that. But looking at New York Stock Exchange with 40% buy signals, that is very high. You can expect a correction at New York Stock Exchange stocks. Some of these bigger stocks should have a correction this week. Will that coincide with the Wednesday? Is it a pre-tell about the fundamental things that will come? Driving up ahead of the news, not being able to tackle the fundamental news this week, bringing the market down by the end of the week. I'm not sure, I'm just saying that it is high, and I'm not sure that you will find many good buys. On the other hand, I repeated this as well. If things fall in the right way and these numbers like relative strength index and other momentum indicators are high, you can get into a very, very nice frantic rally. So it's again a situation where the risk reward is, I would say, slightly in favor of a red market, but with that huge potential upside. London 32% buy signals, more or less the same like the week before, but Tokyo is up at 41, heading for yet a correction. Just in China at 24, being somewhat stable. In China, it's been falling since it hit 45 in week 45. Starting to get cheaper in China is an interesting situation. We know that Asia affects European markets. So these are the signals. I will have a quick look at the chart, trying to determine my final answer will be a green or a red week. And as you can hear, and you've been hearing me saying for quite many weeks now, it's so hard to say because we're in a situation where things can go both ways. If you are watching this podcast on YouTube, you will see the chart, but if you're listening to it on Spotify or wherever you are, it is also available in video format, either on Spotify or on YouTube, and you can actually see the charts. I will type in the ticker Exig. We will get up the Exig chart and have a look. And here are some of the things that I want you to pay attention to. First off, we are in the top of a falling trend, indicating a high likelihood that we should continue down. Now we go and look at the relative strength index. It is just underneath the chart. You will see a smaller chart, and you can see that there is a red pivot top found at 70, indicative further down. These pivot bottom and tops, because there was also found a top at 11,300 and some 58 back November 15 in the main chart. These are specially made at StockInvest.us. I will not go into how they are found, but they represent what the system think is major tops and bottoms, significant tops and bottom. Uses a few indicators to define where it think is a, as I say, a significant bottom or top. That top was found 1 week plus ago, and market's been falling. Now, at the top of the trend, being overbought or topping out at relative strength index, indicating a high chance of a downturn. But there is so much support below that there is no reason to think that this will be very scary. It can just be very slow, painful, like I said last week, they're just painful. It will be dragging very on. And when we go 3-4 weeks ahead, we just see that it's been a slow downturn until it finds that support level where it turns. Biggest support level right now is 10,800. It is the long-term moving average. Has good support at 11,000 also, so it can just be a very, very short correction. But everything indicates that we are at the crossroad. At the same time, being where it is now, it only needs to break the trend up, meaning that it has a small upturn, and these things really start to change fast as we have these first real good sign of breaking up. The first sign was all these bottoms around 10,300. 3 times we had 3 bottoms around this level. Triple bottom, very good sign. Now we are testing the top. We are testing how much resistance there will be breaking through. And if it breaks through, continuing upward, the resistance above is not as much as the support below, giving, in my opinion, an okay risk reward. As I read the chart and as I see the chart, I think it's a bigger chance for an upturn than a downturn for the last 4 weeks of this year. But you should pay attention because it may very well just be a very slow dance downwards to 10,300 again. So my bet is for an upside for the week as such, with such good support below. I don't think the market will fall to 10,800. Then the GDP on Wednesday has to crash everything, and it actually may. So pay attention to the numbers, but I think it has to be a very bad number to really crash the market. Best case scenario is numbers come in at somewhat good, and we will have a minor rally upwards to 11,800 for Nasdaq. The risk reward puts me in a situation where you like to be on the trigger to get more exposure in the market. At the same time, being at the top, you have to be somewhat cautious. I will discuss more about the actual trading tips, which is coming up now for the week ahead of us. I think it will be a green week. Be prepared. It can really go both ways. This can be a very hard week if the numbers come in the wrong direction. I think they will be somewhat on target. I think the real challenges are waiting a few more weeks ahead. Friday number is the most important number for me because it is the unemployment rate numbers, and I expecting these to increase very fast, and once that recession fear starts entering the market, I think it will be more struggle ahead. We will head for the train tips and see what stocks can we trade this week. Going for Microsoft last week was a good choice, but Xpeng, well, that trade is not successful as we speak, and it's still open. But I will get back to the details of our 3 open positions. First, I will not do any new trades this week. I will not increase my exposure, and not to waste your time. I already argued a lot in the market section. Here are some stocks which I think might do very well. I think Tesla might do very well this week. I think Amazon will do very well this week. I have a feeling it might be a short-term rally in Mullen, but that is a very difficult stock and you shouldn't risk it unless you are prepared to lose money. Amazon, Tesla looks to me like low risk, potentially good upside, just have to play them right. In addition to this, there is plenty of other stocks you can find them. You can go to StockInvest, and I recommend you to use a relative strength index list in this case, or undervalued lists. Find stocks that is not too high on relative strength index, which might have that upturn. Find a good support below, little resistance above, and you should have good picks. Why do I not want to trade these stocks saying that Amazon do good, Tesla will do good? Well, simply because I have enough exposure as is. I'm not sure how market will do. I will try look more towards the Wednesday, get a feeling how market is moving, see how they are moving before maybe increasing more positions. Until then, I will remain a little restrictive because right now I sit in 3 stocks and 2 of them a little bit too risky. Microsoft, I don't worry so much about Microsoft, but these two other are too risky. And given a possible downturn, if GDP numbers come in very hard, I do not want to get overexposure. We sit in Zoom. Just a quick recap. Last week, XPEV was closed, Meta was closed, Moon was closed. Sorry, that was week 45. And we had such a nice profit. We had profit after profit after profit. Now, this week, 3 trades were open. They were not closed last week because the first one, America, bought in week 34 as a gamble stock. I told you that this will be a gamble. We will not put a trailing stop loss on it because it should move. Last week they produced quarter results and the quarter results were somewhat okay, but market did not react to it at all, and we are currently sitting in a loss of 21% in America. I've traded America many times, extremely successfully trades, but now we've been waiting very long for the upturn in America, and the only thing that can push the stock up now is if the markets turn up or there are some very special news for America. I think fundamentally the stock has all the classic things needed for an upturn. They are growing their revenues, they are growing their market shares, releasing a lot of new products. Technically it shows a sign of bottoming, so I think it is, but it just needs that good market to go up. Still stays in the portfolio at a big loss. Now, we bought Microsoft last week at, I got in at 241.80. It was not the lowest. I'm not sure if it was down at 240 or somewhere around there. It was not the best price, but it's still a good price. Ending week at 247.49 is up 2.35% so far. Very happy about that. It was a hard week last week. And it remains in the portfolio. I think Microsoft have more in store. We will see. Then it was XPEV, the mistake I did with XPEV. I was a little early on the trigger. I got in a little earlier. I should have followed the trend much more closer. I got in at 7:30, but it was down at 7 or maybe even just below 7 on Monday last week. I was occupied with other things and I thought, okay, it looks somewhat okay. So I could have a very good trade, but 7:30 was a little bit high. It was moving up and down, was up at 7:50 and then down, ending the week at 7:07, currently sitting with a loss of 3.15. Now this week will be XPEV numbers, and you will see how these numbers play out. They will for sure move the stock in one way or another. XPEV has been increasing production, has been doing many of the right things, but the market for EV stocks has been hard lately. The argument used is that people see a recession coming, investments into EV cars will not be as hot as it was. But what people forget is that the governments, they keep ordering as they want this green shift. I'm a huge believer in electrical vehicles. It's just finding these companies that will do good. And as soon as market starts to lift upwards, I think there will be an insane upturn in electrical vehicle stocks. But this XPEV stock trade might be a hurtful one. I don't know yet. It's still in my portfolio. I have not been able, so far I run a little bit big stop loss, to make up my mind. It will be a gamble next week when we will speak. I might have lost some money in XPEV, or I will be sitting on the green fence. Hard to say. But with these 3 trades, I will just sit calm and wait. Meta looks good to me. Plenty of upside in Meta. If you get it a little lower, it will even be better, but there is many stocks which may do very well if markets turn up. So this week you will get a lot of answers. keep an eye on the fundamental things. Don't be taken by surprise. And maybe, just maybe, when we speak next week, finally we will have that confirmation about the end of the year, because it might just be that we are heading for a nice ending, a nice upturn. Statistically, it's a good time of the year, so we will just wait and see. Not the most useful podcast among the many hundreds made, but hopefully you got something out of it. And next week is a new week. Until then, I hope you will have a splendid week. I hope you will cash some greens. I hope numbers on Wednesday will be good. That it will be the settlement for 3 very, very nice trading weeks ahead. We will see. I don't know. That is why I'm a little bit reserved. I might go in much harder. We will see, and we will speak in just a week. Bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.